What is going on, guys? It's Justin from Push and Profit. Hope you're having a beautiful day today. Now, in this video, we're gonna go ahead and break down where I would put $10,000 in the current market if I was a beginner. Now, this video is gonna go over portfolio allocation, and I think the information I'm gonna be saying in this video may be surprising or just enlightening. So I definitely encourage you guys to watch this video to the very end. Now, getting straight into it, if I had $10,000 to, engage in the market, and I was a beginner, the first thing I would do is use 5%, which would be roughly $500 to day trade in the market. Now, this may be surprising. You may be thinking, why only $500? Why only 5% for day trading, right? And the reason is because day trading is going to be the most riskiest and most active form of engagement in the overall market. And, I think starting off, even if you have done paper trading and shown proof in paper trading, I still think that once you start using real hard-earned capital, that you should only use 5%, which is $500. And of course, this is a number that you could eventually scale up to a higher amount. But when you're first starting out, I don't think you should be day trading with $10,000, right? Day trading, again, is the most riskiest and most active form of engagement in the market. And, you're looking at time frames that are very short. You're looking at intraday time frames, meaning you're buying into a, asset and you're selling that asset in the same day. So you may be having to make decisions within a few seconds or a few minutes. And I think if you're starting out, it's definitely not a good idea to use $10,000 because at the end of the day, this is your hard-earned capital, right? You don't want to just throw your money away. No one wants to do that, right? So I definitely recommend only using 5%. And as you guys show yourselves, proof of success, then of course you could go ahead and raise that number to start using more. But in the beginning, 5%, and in this example would only be $500. Next, 45%, which would be equivalent to $4,500 for this example, would be used for swing trading. Now, swing trading, I mentioned it in a few other videos, but just to break it down, it's really when you enter a position and you hold it for more than a day. So these are, trades that you hold for maybe 2 days, maybe a few days, maybe a few weeks, and maybe even a month or so, right? Now, this is still not passive as investing, but it's not as active as day trading, right? So your time frames are a little bit larger, and I think as you first start out, swing trading is going to be pretty much your best source as far as being able to actively, trade in the market, but still have kind of that passive, connotation associated with it. So definitely, I would recommend 5% for day trading, 45% for swing trading, and then lastly, I would recommend 50% be used for investing. Now, again, at the end of the day, when it comes to what assets you choose to invest in the market, it's completely up to you. But as a recommendation or a tip, I would recommend investing long term in blue chip stocks. Now, what are blue chip stocks? Blue chip stocks are pretty much large cap companies and companies that have provenly shown success over the years. Maybe they increased their dividends over the few years, or just they had great earnings over the last few years. And investing is something that you're going to hold for years, right? Maybe until the day you retire. So I definitely recommend that if you have $10,000 right now to engage in the market, the best way to split it up is to really just use $500 for day trading, $4,500 for swing trading, and $5,000 for investing long term. Now, again, this isn't a rule or something that you 100% have to adhere to. The numbers could slightly be a little different. This is really just like a template. And of course, it doesn't have to be 5%. Maybe it could be 10%. But at the end of the day, I think it should be split up in that way. And as you gain more experience in the market, of course, you could kind of, maybe start using, 25% for day trading and 25% for swing trading. Or eventually, maybe you're, find out that your style of trading doesn't really resonate well with swing trading. You could just go 50% day trading. But one thing that I definitely have to encourage is that you always are invested long term in the market. I don't care if you're, the best day trader or swing trader. I definitely think that, just as a way to mitigate risk, investing long term is something that you shouldn't ignore. So if you have $10,000 to, engage in the market, then I definitely think, of course, you have to set aside some of the capital for long-term investing. But again, as far as the trading portion goes, those numbers are going to change the more comfortable you get with, trading in the market and the more experience you have. Now, of course, day trading, swing trading, long-term investing, when to buy, when to sell, these are all concepts that I talk about in the Push and Profit program, which, quick plug, by the way, is going to be the first link in the description below, where there is a coupon code, where there is a video lesson library that has over 5 hours of information to learn how to trade in the market. And it also has, our daily briefings where I go over stocks that may potentially run up, and we kind of just talk about things right before the market opens. Sometimes it's a little bit after the market has opened, but it's definitely a great community. So definitely make sure to check out that link in the description below. And also, with that being said, before you guys leave, I need you guys to watch this next video right here, because it's really going to help you guys out.